morning. Again, I welcome you in the next session, that is of Introduction to Global Financial Markets. So, in this session, we will talk about the global financial markets, and let's dive deeper into this concept. It is a fascinating and critical area of business and commerce. So, what are global financial markets? Oh, they are actually the platforms where buyer as well as sellers trade their assets like stocks, bonds and currencies and derivatives. So, these markets are actually the essential, they allow money to flow between countries and helps the businesses to grow and even give governments the tools to manage their economies. So, by the end of this session, you will be or the learners will be able to understand how the global markets are structured, who are the participants in these particular markets, and why these market matters all of us as a students. So, firstly understand the structure of global financial markets. So, let us start with the basic structure of global financial markets. These markets are actually divided into several segments like capital markets, money markets, derivative markets, foreign exchange and commodity markets. Some of these types we have discussed in the previous sessions. So, each has a unique function. For example, capital markets deal with long term investments like stocks and bonds, while money markets handle short term borrowings and lendings. These segments do not operate in isolation, so they are interconnected globally. What happens in the New York Stock Exchange can ripple into the markets in Tokyo or even in Mumbai. Okay, so now firstly let us have an overview of the capital market again. So, capital markets are divided into equity and debt markets. Actually, equity markets or equities are the places or the things where company share are bought and sold. Think of the Bombay Stock Exchange. Debt market is involve bonds issued by the companies of government. These markets are crucial for raising the long term funds and enabling economic growth. For instance, when the Indian government issues bonds, it uses the proceeds of for infrastructure projects or social schemes also. Let us come to the money market. The money market is a more short term based or short tenure based market. Here participants are trade instruments like treasury bills, commercial papers and certificates of deposits. These all things we discussed previously, and these all typically matters with the maturity that is less than a year. So, these all have the maturity of less than a year, and this market again ensures that always these monies or these instruments are used for the purpose of converting into the cash. So, enough cash system to be keep things running smoothly. Banks, for example, they rely on the money market for day to day liquidity. Next one is foreign exchange market. So, what are these foreign exchange market? These markets are commonly known as forex. The foreign exchange market is the world's largest financial markets. Trillions of dollars traded every day. Here currencies are exchanged. So, when an Indian importer buys electronics from Japan, they use the forex market to buy yen using rupees. These markets include spot trades, forward contracts and currency futures. These all things helps in manage international trade and investment risks. Thereafter the next one is derivative markets. What are these derivative markets? Now to derivatives, these are the contracts whose value is actually based on the other assets like stocks, bonds as well as commodities. So, common types of derivatives include the futures, options and swaps. So, people or investor use derivatives for three main reasons. First, to hedge against the risk. That means to try to save himself against the risk due to the transactions. Speculates for profits or arbitrage price differences between market. For instance, let us understand these things. A farmer might use futures to lock in a good price for their wheat before harvest. That can be an example of future contract. Now coming to the commodity markets. So what are these commodity markets? Actually the commodity markets are the place where raw goods like gold, oil and wheat and so many are there, these are traded. These can be physical markets or electronic exchanges as well. MCX is commonly known as commodity market. Prices in these markets impact the everyday life. For instance, rising crude oil price can increase fuel and transportation cost. So, commodity trading is closely tied to geopolitical events and climate patterns, adding complexity as well as volatility in the prices. Now, what are the major participants of global financial markets? So, the participants, or we can say that who are involved in these markets. So, everyone from individual investors to massive pension funds, governments, banks or even speculators also. Central banks participates to manage currency and control the inflation in this market. Corporations enter to raise capital and speculators look for profit from market movements. This diversity keeps the market active and efficient. Now coming to the functions, that is what are the functions of financial markets? Actually the financial markets play several important roles in the economy and they help with the capital formation as we know, funding new businesses. We can see the nowadays new businesses like startups are there. They enable price discovery, telling us what something is worth. Okay, that means price discovery is something like the demand and market force interaction and then discovery of the price. They also provide the liquidity, allowing investors to quickly buy or sell. And they also allow risk sharing and efficient resource allocation. Without these markets, economic development of the institution of the company would be extremely difficult. That is what the role of these markets. Okay. Now, key global financial centers. Let us talk about the key global financial centers. What are the global financial centers? Let us see. Some cities stand out as global financial hubs like New York, London and Hong Kong. Why? Because they have a strong legal systems, advanced infrastructures, deep capital markets and favorable regulatory environments. These cities host major stock exchanges, investment banks and institutional investors that drive global finance. Okay. So, these are some hubs. Now, markets need oversight. That is where regulators like SEBI in India or SEC in US come in the role. At the global level, we have the institutions like IMF, that is International Monetary Fund, World Bank and BIS. They ensure the stability, transparency and fairness in financial transactions across the borders. especially in times of crisis when the countries needs the funds. So, these all bodies play a major role. Now, coming to the global stock exchanges, as the global stock exchanges are the part of the global markets. So, stock exchanges are the places where equities are traded, debts are traded, and mutual funds are also traded. Some more instruments are also there. So, major stock exchanges includes New York Stock Exchange, Nasdaq, London Stock Exchange, Tokyo Stock Exchange, and each stock exchange has its own index. Like in India, we have Sensex and Nifty, S&P 500, in Japan Nikkei 225 to represent the market performance, and these indices serve as economic barometers, or we can say the barometer of the economy. Now, technological impact on the financial markets. So, we can see that the technology has transformed the markets actually from algorithmic trading to blockchain innovation has made trading faster, cheaper and more transparent. And the apps like Zerodha or Robinhood in foreign allow anyone to trade from their mobile phones, but with this convenience comes the risk, like cyber threats has increased, market volatility has increased. Now, what are the risks in the global financial markets? Let us come to the risk side of the financial markets or global financial markets. So, when we talk about this risk, so market is full of risk. So, first is the market risk is the risk of prices falling, credit rise when borrow defaults, liquidity risk when you can't sell assets quickly, operational risk can be there which involves system failures, and systematic risk like we saw in 2008 can shake the whole financial system. These are the various types of risk. Now, coming to the recent trend and developments in the global financial systems or global financial markets. So, let us come to the trends. Recent trends actually includes the rise of ESG investing, where environmental and social factors guide investment decisions. That is what happening today. Digital assets like Bitcoin have introduced and new asset classes, and AI and big data are being used to predict the market trends and automate the trading strategies. We can have the AI presence in the trading algorithms, in the trading of various markets. They also provide the trading strategies in the markets. Now, coming to the global financial crisis and the lesson we learned from this crisis which happened in the few years back. So, we have seen financial market collapse like during the 2008 global financial crisis or in the 1997 Asian crisis. These events taught us the dangers of excessive leverage, poor regulation and lack of transparency. They also led to reforms that strengthened the global financial architecture. So, these crises led us to the more safer, more programmable and more planned for the purpose of global economies. Impact of global events on the financial market is also there. We can see the event of COVID-19 also, which also hit the global markets and unplugged investors panicked and companies lost values. But governments and central banks responded with stimulus packages and markets slowly recovered. This shows how resilient yet sensitive global financial markets can be. Okay. So, in this session today we talked about more about the global financial markets, which are the types of markets in the global scenario. And now finally coming to the role of financial education, or how this financial education role plays a role in the global markets. So, financial literacy is actually more important than ever. So, whether you are a future accountant, entrepreneur, or a policy maker, understanding these global financial markets help you to make informed decisions, foresighted policies, and learning how to manage money, assess risk, and invest wisely is actually a lifelong skill which can be used for the purpose of policy formation for the global market and the strong infrastructures in the global financial markets. So, in the summary of the today's session, what we can talk, or we can say that global financial markets, we talked about the types of that particular markets, which are capital, money, forex, derivatives, and the commodities. We also discussed about the function of the global markets, participants, what are the various types of participants, and the interconnection of global markets with the different economies. So, financial market is actually a backbone to the modern economy, and understanding it helps us to navigate the business world with more confidence. With these words, I would like to stop myself in this session. Thank you for the today's session. See you in the next session. Thank you.